welcome to the India Development Debate right here on ET Now. I'm Supriya Srinath and let's go straight across to the debate that we're putting the spotlight on this evening. Hope is fading for banks for a bailout through the IBC route. The asset of 9 NPA firms have been identified by the RBI and that will go under the hammer very soon, but looks like the auction is unlikely to bring an end to their woes. For instance, there are just 2 bidders for Essar Steel's assets after the deadline for bidding ended today. Remember, the Ruias promoted Essar Steel owes over 40,000 crore rupees to banks. In fact, there is hardly any interest for the asset which have been put on the block under the new insolvency law. For instance, the Bhushan Steel case, which owes banks 56,000 crore rupees. Here too, there are just 2 bidders and the best quote, which is from JSW, is worth less than 30,000 crore rupees. Bhushan and Essar are not isolated cases. Banking sources tell us that in most cases, the response from prospective bidders is very, very weak. Just this means that the haircut that banks may have to take is a big one on that account. In fact, we are told 80% haircut is most likely for the first 3 cases in the NCLT. The low appetite for NPAS is turning out to be a big headache for banks that have been pinning their hopes on the insolvency process to come out of the bad loan mess. Not just that, the poor response by prospective bidders is a pointer to India Inc.'s low confidence in the immediate turnaround. On India Development Debate this evening, we look at the challenges before India's banking system in getting their money back even through the IBC route. I'm Supriya Srinath and joining us on the show this evening are Behram Vakil, co-founder AZB Partners, VG Kannan, CEO India Bank Association, R. Jagannathan, editorial director Swaraj Magazine, Maithili Busnurmad, consulting editor ET Now, and of course none other than Swaminathan Iyer, consulting editor ET Now as well. So thank you each one of you for being with us, and it's only fair that we begin with you, Maithili. As far as this whole NPMS is concerned and the big bank woes and the big bank cleanup is concerned, at what level do you believe we've shot ourselves in the foot in a bid to rein in on the bad assets, in a bid to rein in on NPAs? We've perhaps shot ourselves in the foot. That's what a lot of people believe. What's your opinion on that?
Well, yes, possibly for 2 reasons. One, we've tarred all NPAs with the same brush. All promoters we have assumed are defaulters and willful defaulters and perhaps have their actions a border on fraud. So we have not taken a nuanced approach to understand why a particular account has become an NPA. And once we've kind of tarred all promoters with that same brush, then the next process is under the NCLT, there's really very little scope to do anything to try and revive the companies. It's almost as if the liquidation is a done deal. So I think for both these reasons, we might perhaps have overstretched ourselves, particularly because under the amendment to the IBC, what we've done is we've virtually ruled out almost anybody who could possibly bid and revive these projects, revise these bad assets and bring them back to health. Almost all of them have been ruled out. So by taking a very textbook approach, I think, to the entire issue of bankruptcy, of liquidation, in the process not only are the promoters being penalized, but perhaps a larger society, because ultimately when banks take this huge haircut, it is nobody but the taxpayer who ultimately picks up the can. So that's where I think the problem rises. Maybe we need to have taken a more nuanced approach to the entire code, particularly the amendments I think were a little misproved.
Okay, let me just make it more specific. And yes, Maithili believes we've perhaps shot ourselves in the foot by taking this textbook approach. Let me take this across to Mr. Kannan there. And Mr. Kannan, how do you read the Essar Steel bid that came in at 5 p.m. this evening when the deadline ended? Just 2 companies putting in a bid, and one of them, of course, you know, its fate still hangs in balance because one of the family members is a part of the bidding consortium, of course, not as a promoter, but as a shareholder. He's no longer a promoter in anywhere else. My question to you is, how do you read the Essar bid process? I mean, one of the things that Maithili said was that because we've taken such a textbook approach, what has really happened is that we have gone ahead and committed ourselves to cleaning up with a blanket ban on promoters. And perhaps this is a result of what we are seeing. So let's first talk specifics, the textbook approach versus what you're seeing. How do you read the Essar Steel bid and just 2 offers coming in?
I would read this 2 bids as just simple bids. Let's not go and find out deep into what has actually happened. The jury is still out as to whether the promoter should be out or not. Whereas the banks are concerned, they will follow the rule of the ordinance to the letter. And it will be for the RP to decide as to whether the the two bidders are complying with the ordinance and as per the regulations. I think we will have to leave it at that and let the RP and the COC decide as to what is the best bid. I don't really know what is the exact quantum of the bid, but I think they should be quite competitive. As far as we all know, Essar Steel asset is a good asset, and therefore I think it's a very good asset for anyone to pick up. So we feel that the bids should be taken on the face value. Let's accept what it is coming.
Okay, while I'm talking about a specific case, I also want to get in Swami on this issue. And Swami, do you agree with Maithili and do you agree with Mr. Kannan that, the bids are perhaps we don't know the values, but it is perhaps a competitive bid that has come in? Let the committee of creditors decide. But the reality is that this is a very textbook approach that Maithili insists we are taking to resolving the NPA mess. A blanket ban on promoters, this is how it's going to be done. Do you believe this sort of rigidity, if I may, I'm borrowing a word which Maithili did not speak but perhaps alluded to, is this sort of rigidity going to lead to NPA cleanup? What's your take?
I think you have to recognize that this is not just an economic issue, it's a political issue. There has been this thing of ages and ages. There was this cozy relationship between promoters and banks. At this particular point of time, I think the RBI had to demonstrate a determination that, we are not just going to allow that old system to continue. Because of that, they have got into a system where the promoters are not allowed to bid. There are some other countries where promoters are allowed to bid. And if you were going by the international example, you might argue that, as Maithili is saying, that too many promoters are being tarred with the same brush. I would say you need to be tough to begin with. If it is demonstrated that this particular approach is not working, then you can consider a dilution. The real problem, I would say, is that all the banks should have intervened much earlier, long before the companies had accumulated this many bad assets. If you had had that early intervention, everything would have been much more easily saleable, everything would have been much more easily manageable. So the problem that you are really seeing is a very late realization of the problem. And now that you have these mountain of debts, which includes a large amount of interest for years and years, there is a problem. But I would say at this point of time, you must go ahead on the current guidelines only if it is proved that this thing is not working. Should you be looking at the alternative? And if you do that, you would also convince the public that this is not just a scam, this is not just a way of bringing back the promoters. You would have to demonstrate that this particular thing is not working, and therefore to allow the promoters to bid is not a mistake. We can consider it.
Oh, that's a very important point that you're bringing. Go ahead with what is the present norm, demonstrate. If it doesn't work out, then change it, but at least you would have demonstrated to the larger public that there isn't a scam out there. And given the narrative that there already is, I think it's important to perhaps demonstrate that. Jaggi, do you agree with that? Do you agree with Swami that, right now, even though we may have shot ourselves in the foot to begin with, but we don't have a choice. We need to go forward with what has been decided upon, even if it fails. And if it fails, we perhaps change course. But at least we would have demonstrated that we meant walking the talk on it.
Yeah, I entirely agree with Swami on this issue, because if we had shown that you're going to do some wishy-washy thing where the same old fellows come back and things like that, not only it would have been politically damaging to the government, and the point is it would have established once and for all that the rich will never pay for their follies, that forget about, though we may have tarred say genuine bankruptcies and bad luck with people who may have looted the company, but the fact is still people are made to lose the companies for the mistakes they may have made, either with genuine good faith or with malified intent. You cannot prove to the world that there is an exit policy for management. The whole point of having this is that we keep talking about exit policy for labor but nothing for management. This demonstrates for the first time that you can do so. The second point I would add to Swami's thing is that this unfortunately was the only way you could have done it given the structure of public sector bank management. No, why, I mean, as Swami clearly mentioned, why didn't these guys tackle the problem at an earlier stage? The reason is very simple. Every bank CEO or chairman has a tenure of 2.5 years max. Okay, the last thing he wants is a CBI on his CBI or a CVC on his tail, just 2 months before retirement, where the rest of his, instead of living off his pension, he has people to answer questions about how did you write this loan off, how did you give this loan in the first place, how much money did you make, I am going to check whether you are part of this crookery and whether there is a conspiracy to loot the bank. That's the kind of stuff you would have faced. So, I think these 2 points, one, that you need to demonstrate that you are serious about people who need to get out for having failed with the company, and the fact that there was no other way because bankers themselves were unwilling to take the hard plunge. So, the Reserve Bank had to be pushed into it.
Alright, so the Reserve Bank had to be pushed into it because bankers were not ring fenced enough, and that's a point that I will touch upon a little later. Is there enough ring fencing for them to take these decisions now? But Behram Vakil, before I go back to Essar as a talking point, because that bid has come in today and I need to ask questions on appetite of investors and all of that, I must ask you, what's your take on how it's all panning out as far as the IBC is concerned, the insolvency, how things are shaping up, the kind of cases that have been referred, the kind of investor appetite that we're seeing? As somebody who's got a skin in the game there in terms of your clients and in terms of how you're advising them, how do you believe this is panning out?
Yeah, so thanks a lot. I would say that I'm extremely satisfied. I think most people would feel that the last 15 months have been so far so good, and that everything has worked extremely well, especially the timelines and the jurisprudence that has been formulated so far.
Okay, but I do want to go back to Essar because I think I want to talk to my panel about the kind of bid that has come in terms of, you know, the interest that it is envisaged. And Maithili, let me begin with you. One of the things that was said about this IBC norms was that it will lead to significant asset value erosion. Given the big guns, a Tata Steel, a Vedanta, a JSW that was supposed to put in a bid has refrained from putting in one. Is that worst fear coming true? I mean, why have these guys not participated? Because everybody said there is a lot of investor appetite. Why has that appetite vanished?
Well, I'm not sure how far this is correct, but there are reports that a poison pill has been instituted under which the supplier to Essar would no longer be supplying to Essar. So this has killed the appetite of a lot of potential bidders. Now, this is as per media reports. But the fact is, Supriya, that even for Vijay Mallya's bungalow in Bombay, the State Bank of India has had to reduce its reserve price a number of times, and they've not got a bid as yet. So it's not easy in India really to find buyers for these distressed assets. So I think it's important for us to also remember, it's not just the promoters, but any company which has been a non-performing asset, any promoter, any guarantor, anybody who has remotely any connection whatsoever with the promoters is virtually ruled out. So I think it's important for us to realize that even as we punish the promoters, and I do agree, wherever the promoters are guilty of fraud, wherever they have willfully defaulted, they do need to be punished. But I think it's also important to see, can we preserve these assets? Because these assets have been built essentially with public money. They've been essentially with bank credit, which is depositors' funds. So can we have a more balanced approach whereby we try to preserve value in these assets, and at the same time we do punish the promoters, but after these assets have been salvaged, so that once the account is up and running, then maybe we can think in terms of some penal interest or something else that can be applied. So I think this kind of, all or nothing kind of approach is very difficult to have in the real world. And to Jaggi's statement that we need to send a signal, I think we need to also understand, is the signal more important or is what we achieve more important? So I think that is very important. And as far as the point about banks, that this is the only way you could do it. Why not we address the root of the problem rather than just looking at the symptom? If we really put public sector banks at arm's length from the government, even through a holding company or proper bank board bureau, we would never have to do this, because the situation like this will again arise in future as long as banks remain in the public sector, as long as they function as an adjunct almost as of the finance ministry.
Right.
So I think we need to address the root of the problem, not just the symptom.
No, absolutely, and I do intend to touch upon the root of the problem and not just the symptom, Maithili. I can assure you on that. Over the next 40 odd minutes that we have on the show, we will talk about that in just a bit. But Swami, coming to you, the point that Maithili is making that, a signal is well sent out, but it's also important to find out what do we achieve out of this. Given what we achieve out of this, what explains the fact that three of the biggest bidders did not find Essar Steel and attractive at all. And there are two bids that have come in. One has come in from ArcelorMittal and one has come in from Nu Metal. And, Revant Ruia, who's a part of the Ruia family, is a 25% roughly shareholder in that. He's not a promoter, but he's a shareholder. One doesn't know what the fate of that bid will be. But the question really is that, why has Essar Steel become so unattractive? And what happened to all those talks about asset value erosion not happening?
Frankly, you will have to ask the guys who did not bid. I would be completely speculating without any ground to speculate why they are not bidding. But I would simply say that in Indian conditions, we do not have a culture of waiting for distressed assets and pouncing on them. In other countries, there are specialized agencies who are, painting scenarios for takeovers all the time. I think with time we will develop that culture. We don't have it right now. It will develop and it may take a little time. There is some talk of a particular pipeline being controlled by the Essar group, and that has made it unattractive for other people. Whether that is true or not, I can't really say, because it's supposed to be an arm's length thing. It could be one reason. But at the end of it all, there's no point looking just at Essar. We will have to wait and see the entire package. I will say this much. Suppose the bid at which whoever wins is low. I would say, so what? If the plant changes hands and revives, at the end of it, nobody is going to remember what was the price at which you took it over. It is, of course, true that the banks would be taking a larger haircut the lower the price. But that is a price they have to pay for their own mismanagement, for their tardiness, and, as Maithili says, for their own public sector culture and their inability to intervene effectively. And I would say that, the more it becomes obvious that the public sector banks can't handle this kind of thing, only then will you get the kind of reform where perhaps they will be able to handle it. So I think that you have to go through this particular fire. Even if these auctions do not go very well, I think it is an important way, not just of sending a signal, which is very important, as Jaggi said, but also of putting pressure, saying, in future, you guys in the banks, why did you not intervene much earlier? And if you did not do so, it means that you are dragging the bank down like some of the other guys have done. So a signal needs to be sent out to the public sector managers, and that, I think, will be useful.
So it's just not a signal for Indian industry for defaulting and treating debt as equity, but it's also a signal that needs to be sent out to bank management for not letting the issue drag for so long that we've actually ended up in this mess right here. That's a point well taken. But Mr. Kannan, according to a lot of reports that are now available, many cases that are in resolution, that are in NCLT, have seen an erosion of nearly 80% haircut is what we are talking about. And I don't want to lose context here. Was this envisaged and is this justified?
I don't think so any of the banks were expecting such a large haircut, and even now it's always a lot of speculation that it's going to be 80% haircut. That could be 80% haircut in a few cases, but I'm sure then there will be a lot of large cases where the haircut could be much lower. And most of the banks have made heavy provisions. I'm told that many of the banks have made more than 60 to 65 and 70% provisions. So that being the case, I think even in those individual cases where the haircut is going to be 80%, it's still speculative, and maybe they may have to make more provisions, where there could also be a write back in the provisions in the areas where the haircut is much lower. So I am still optimistic, and I will go with the other panel members that this is a process we have to go through. It's a pain we have to go through to understand how it's working out, and also send a signal to the market that we are here to get a resolution done rather than simple process of recovery. Earlier also, I think some of the banks did try some sort of a resolution, but it was more by way of giving additional financing to the existing bankers to hope that things will improve in due course. Didn't work out, and in the past about 10-15 years ago, whenever such a help was given, it did work out, but this time probably it didn't work out at all, and there could be various reasons why the accounts turned NPA, and this particular process will send a clear message as to what is going to be the process forward, and the banks would possibly take a different route in case they find that the haircut is going to be heavy. I still feel that and the haircuts may not be so heavy. It could be as high as 80% in a couple of cases, but most of the cases could be much lower than this.
Okay, so let's just talk about the cases where the haircuts will be as high as 80%. And Mr. Vakil, who will account for the reported 80% haircuts that we've been hearing about and the erosion of capital that happens on account of that?
No, so again, I am not sure which the exact ones you're talking about, but certainly the steel ones, I think we've been very, very fortunate with the timing of this, that the commodity cycle is seeing a nice upswing. So the steel ones, I think, should surprise on the upside. Again, you know, Binani, everyone knows there should be virtually zero haircut. So some of the earlier ones, you know, where the assets have really diminished in value because of the time frame, nothing much anyone can do about that. All I can say is that the competitive process has certainly helped us extract the best value possible.
Okay, so while we are talking about asset price discovery, Jaggi, I'm going to come to you, and I think we've had a fair amount of discussion on asset price erosion, asset price discovery and all of that. Two questions there. In a bid to keep promoters out completely, do you believe asset price discovery is being distorted? And the second question is, one of the reasons for a blanket ban of the kind that we've seen in IBC amendments is, and keeping all entities related to defaulting promoters, is obviously political implications. So is it then fair to assume here that asset erosion is a price one will have to pay for the political optics being right here?
Yes, I would think so, because it is the promoter who knows the real and true value of the assets that are being ceded that are being put up for auction, because he's been running the plant, he knows what is the value he can extract from it if he gets back into it. So obviously, if somebody else comes, they will have to take a chance, either overbid or underbid. So I think definitely this is substantially a political motive in this, because no government will want to be seen as bringing back the same promoters now with a lower loan outstanding. So I think the optics of that would be so bad that I think no government can stand it. I mean, that is, and certainly not this government, which has been making a big play about bringing black money and doing all those things and bringing bad businesses to heel and all kinds of things. So I think the political aspect in this decision is very important, and I don't think you can wish it away. And we, after all, live in a political economy. There is no other way out of this.
You know, it's an interesting thing that you say that the political optics cannot be wished away at all. Swami, I want you to come in on that. Having spent 2 lakh crore of taxpayers' money to now recapitalize public sector banks, can the government afford to get the political messaging wrong at this stage? And will that be the big driver in any decision that's going to be taken on this way or that?
No, I think the political message is right. You do have to send out the political message that we are going to have an exit policy for owners. And it really does not matter whether you're lucky or crooked. At the end of it all, if you have failed, you should exit. It's like workers. Some workers are bad, some are unlucky. But you need an exit policy. So too much of a distinction between the good guy and the bad guy, I think we shouldn't get into. You say that if this has gone bust, it should go. And now, when you say that what is the cost in the sense of a write down, all I could say from a national point of view, it doesn't matter. It's a question of how the pie is distributed. It may be that whoever picks it up at an extremely low price has a big upside. So what? Let that guy have a big upside. You may say he's got a big upside at the expense of the banks. Maybe, maybe not. One of the problems we have is that nobody really trusts balance sheets. I mean, as we are suddenly seeing in Fortis and Religare and so on, I mean, the ability of promoters to milk out money in all kinds of ways. If you are the promoter and you get back, you have a way of putting that money in. If you are an outsider and you come in, for all you know, there's been all kinds of stuff that's leaked out and you would not be able to get it back. This to me is an even stronger reason to say, you must not allow the promoter in, certainly not at this stage. We need to get a much better kind of corporate governance. We need to have much tougher auditors who stop this constant milking of a company by the promoters for various loans to various subsidiaries of all kinds. It's such a common thing that happens, and the audit system has not been able to stop it. So we do need to clean up our act, I think, before we allow promoters to bid in this process. And if the prices are low, so be it. Let there be a big upside for whoever bids. If you get a big upside for whoever bids, next time the bids will be more aggressive. So what's the problem?
Maithili, I wanted to come in on that because this is the larger point that you made initially, that if it's about taxpayers' money and this textbook approach will not work. But look at the taxpayers' money argument that, you know, I was making with Swami. 2 lakh crore worth of, you know, bank recapitalization money will be put in, and that's money that you and I have paid as taxes. Can the government then get its messaging wrong at this stage? And, you know, the message that you said that that everybody's been talking about, I know it's important to send out that message, and I know you believe that perhaps we need to resolve and then send out a message at a later stage, but if you don't send out the message now, that attitude change will not happen.
No, Supriya, see, even if you were to rule out the promoters per se, I would have no quarrel. But under the amendment, what we've done, we've ruled out virtually anybody who has even a remote connection with the promoters, any guarantor, any director, any other account where which has been in default. So in the process in the amendment process, we've ruled out virtually everybody. And in the Essar case itself, you've talked about new metals where you say that one of the Ruiyabs has a stake in that company. But even in the case of ArcelorMittal had a stake in Uttam Galva. Uttam Galva is a defaulting company. So in fact, both the bids for Essar Steel would not be accepted as per a strict interpretation of the IBC. So I think it's important that even as you want to penalize the promoters, and if you feel, yes, you want to send a message across that promoters will not be allowed to take the benefit of their own, you know, malified acts or whatever it is, then there is no need to kind of virtually roll out a whole host of other people who perhaps have a very distant connection with the promoters, had no idea at all of what was happening. They were either directors in the company or they were guarantors, and they were not really operationally in charge. So I think in the amendment, we've really kind of taken such a huge broad brush approach that we virtually, as I said, ruled out anybody who could revive the company. And mind you, there is no guarantee that the new bidder will in any way be able to set the project on its feet again. You could be doing exactly the same process. So I think it's important to kind of distinguish between one case to another case and bar only promoters and not those who have only a very distant relationship with the promoters and not in any way operationally responsible for the malified acts in the company.
Okay, that's one point of view, and Maithili and Swami disagree on that. We always like disagreements in debate on the India Development Debate. But before I take a quick breather, I'll get a word in from Mr. Vakil there. And Behram Vakil, the whole discussion about keeping or leaving the promoters out has to do with asset value, asset price discovery. Do you believe this is going to be depressed if promoters are indeed kept out of the bidding process? We'll take a quick word in from you and then take a breather.
Yes, but this is, you know, critical issue that the government has to decide, and that, you know, it's a policy decision and a question of moral hazard, and in its best judgment, it's the decision that the government has made. So, I mean, I cannot fault that at all.
But on that note, I think I'll take a really quick breather here. We come back and put the spotlight on have the RBI and government really overtaken decision making and what should be commercial decision making by public sector banks. We also come back and put the broad spotlight on how all of this really impacts credit offtake, lending by banks, something that they're required to do. Back in a moment, stay right here with us in the India Development Debate on ET Now. Okay, we're back with the India Development Debate right here on ET Now, and we're discussing the state of banks in India. Maithili, I'm going to begin this with you. Have RBI and government in some sense taken over what should have been commercial decision making by India's largest lenders, and those are the PSU banks?
Oh yes, very much so, but unfortunately that has been the case for quite some time. In fact, ever since nationalization that has been the case. Till very recently it was much worse. Banks were effectively functioning as an arm of the finance ministry. That position has improved. I must say under the present government it has certainly improved considerably, but even so, because of their public ownership, because The boards of all these banks, the directors are essentially political appointees, the chairman is a government appointee, and as you've seen, very often the government uses these banks as instruments to achieve their social objectives, whether it is the earlier government telling banks to lend to infrastructure projects, or whether it is the present government telling the banks to lend to MSMEs, to open Jan Dhan accounts. So essentially banks have been used by the government to achieve social objectives. Now in this process there is a price that all of us are paying, because banks cease to function as commercial entities, and this unfortunately is the problem. The moment banks cease to function as commercial entities, lending decisions don't become commercial decisions, they do not become business decisions, they become essentially bureaucratic decisions, and that I think is a root cause of many of the problems that we are seeing at the moment.
Swami, will you agree with that? And do you, but I just want to put in a word, it's not as if these public sector lenders were taking the purest commercial decisions to begin with in the first place. I mean, I know one of the criticisms of this IBC is that a lot of decision making is happening outside of the banks and their power is duly diluted. But the reality also is, it's not as if they were taking only purely commercial decisions. Their decisions were very, were very questionable at times. And of course, like, the other part of this whole thing is that you can be pragmatic and say, give them the flexibility, let there be some back and forth, let there be a decision. But that whole back and forth is what has landed us into this mess, has it not?
Well, let me say that Maithili has been too soft on what was really happening. It wasn't just that there were political appointees. I remember Venkatraman, former RBI governor, and he was supposed to recommend a panel, who should be the guys appointed for the next bank chairman. And he refused to mention a certain number of names. Those guys came to complain to him, why have our names not been put? And Venkatraman says, one has gone through your record, I'm afraid there are some questions have been raised about your integrity, so I have not recommended you. And he says, the guy just said, you just wait and watch. And sure enough, although Venkatraman had not recommended their names, they became bank chairman. I mean, one has heard of bank chairmanships up for auction, public auction. So, to say political appointees were rather soft. You had a situation where, in effect, bank chairmen were being appointed on the basis of promises to kick back large sums of money to the politicians. It was as bad and crude as that. Now, from those days, there has been a considerable improvement, I am happy to say. But the seeds of disaster have been sown very, very long ago. It is not, Maithili says the problem is bureaucrats. I think it's much worse. Narayan Vagul, I remember, I once asked, how often does the telephone ring for a loan? And he laughed and said, it never stops ringing. This was the situation. And whom were the calls for? Sometimes from the bureaucrats, sometimes from the politicians. But everybody constantly under pressure from here, pressure from there. So public sector banking, they always said, in theory, it's supposed to be for the public interest. In practice, it's the very private interest of the politician, with some bureaucrats taking a slice. If you get to the situation where you are virtually auctioning bank chairmanships, what do you expect?
Right.
So we are now reaping what we sowed at that particular time. And we really need to get this whole thing out of the way. I'm so glad that this thing has blown up. I'm so glad the banks are looking in such devastated condition. I'm so glad the public glare has come so much on the malfeasance, on the inability to deal with things early on.
Right.
All this was necessary pain. We had to go through it to get a much better outcome.
Sometimes you've got to see the silver lining of a cloud. I think the silver lining of this cloud is that it has made banking mess a public, a matter of public discourse and narrative, and people, like you said, are reading through that. But Mr. Karan, at one level, is it frustrating to see the RBI and the government do that? And at another level, do you also believe, as a society and as commentators, as experts, are we being too impatient to see the impact of all of this on the ground?
Are you talking about the IBC process, or are you talking about the, what do you call the
IBC.
NPA creation?
The IBC and, the whole crackdown, the resolution, the cleanup.
Okay. Yeah. In fact, I think, I would say this is a excellent opportunity, the NCLT process, to clean up the process, as also lay the way forward. If you have seen the existing legal processes were so long drawn, the banks were actually at sea as to try to find out how to go about it. We have seen so many cases where going on dragging for 5 years, 10 years, 15 years. and no resolution coming out of it, and neither recovery happens. And the existing promoters also got away with it. This particular process gives a specific time frame of 180 days extended by 90 days, by which the resolution process will be finalized. And believe me, I think, you know, there are a lot of apprehensions initially that this is too short a time, we are not ready for it. But I think all the people have come to the fore, and they've taken the entire challenge, and a lot of things have been done. And almost in all cases we expect, at least in the cases where your proper resolution is expected, to be expected by March, and in some cases by June. And this is a particular way forward as to how the process will take place. As far as the promoters are concerned, I think they will also now know that in case they default, and default in a big way, they will certainly be losing their entire equity and whatever they have built, and that is something they will be wary of. I do expect that going forward, maybe 2-3 years down the line, that IBC hopefully the process should not continue. That's hopefully, of course. But having said that, I think this particular process is an excellent process for the banks to clean up the systems, as also to ensure that they can tell the promoter that, you know, enough is enough, now you better either pay up or I'll take you to NCLT, and that they will be very wary of.
Okay, fair point indeed. But you know, I do want to take this forward, and just to be the devil's advocate here, Jaggi, coming to you, the government has been criticized of interfering, the RBI has been criticized of this high-handed attitude as far as this resolution is concerned. You know, as commentators, people have questioned, are we being too impatient? It takes almost 6 months to a year for things to begin showing on the ground. But the reality also is, what else could the government have done? Recognition, resolution and recapitalization. They've tried to do all three. What else could the government have done? The NPA mess was huge. This is perhaps, you know, the only way to tackle this was recognize, resolve and then recapitalize. And I'm presuming they've done all of three.
Yeah, absolutely. See, the only alternative to this process was to have a legislative change where you start privatizing the banks so that good promoters come in and start taking them over and start resolving these issues. As long as you cannot privatize banks, good or bad banks, you are going to have this process where the government felt that the only way was to ask the RBI to directly step in and say, okay, resolve this process, and bankers have a certain level of comfort. Now they can say that, okay, look, the Reserve Bank has told us, so we can resolve this. Otherwise, I would have landed up at the CBI's court tomorrow. So I think this actually provides a solution for them, and I think there was no alternative short of actually taking a lot of banks out of the public sector. You are not going to get this kind of forward movement on resolution. So the 3 R's needed a 4th R, which is removal of public sector banks from the public sector.
Removing public sector banks from the public sector. That's a good way to put it, and I think that's a topic that I will touch upon towards the very close of this. But Maithili, just to talk about, you know, how the government perhaps has given some kind of a legislative resolve to doing this. The question also is, has enough been done? I mean, one of the things that was always said in the past, the criticism was that there isn't enough ring fencing for bank officials to take these decisions, and these are discretionary decisions. These are discretions. These can't be tick in the box objective decisions that can be taken on haircuts. These could be questioned. These are always you know, subjective. These are discretionary. So in some sense, do you believe there's enough ring fencing now for the banks, for experts involved to take these tough decisions, to take these decisions which can be questioned, but you know, you need that ring fencing, because nobody wants to retire and be hauled up in a CBI court 15 years after you've hung up your boots.
Yeah, but this is the wrong way of going about it, Supriya, because there was an option. In fact, rather than, even with the IBC, rather than going through this process, the government could have set up a bad bank which would temporarily take over these assets and try and see what can be done with them to revive them, and then if necessary write off. The write off in that case might have been much better, because if you could temporarily carve out these assets, remove them from the balance sheet of the banks, then banks would have been able to lend again, and you would have got some breathing space. Today in the process, what we are doing, as I said, is particularly with the amendment, is that's not just the promoters alone. Barring the promoters, I could still have accepted. But there are 10 categories of people, categories under the IBC amendment who have been ruled out. And 2 of these have done the most damage. Anybody who is given a guaranteed or anybody who is a defaulter. Now, anybody whose account has been an NPA for more than a year is ruled out. So, these are very complex assets and not you and I cannot bid for them. So, it's very important to ensure that you do not rule out the entire universe of potential bidders. So, in the process what you have done is that you have ensured that virtually nobody can bid, and bankers, officials go through the process very mechanically because they are on safe ground. You have an interim resolution professional who has never worked in a bank, who has never lent a penny in their entire life. All the resolution professionals are all theoreticians. And I repeat that every single resolution professional is a theoretician. They know the theory very well, but they have not a single banker is a resolution professional. At the same time, you have a committee of creditors, so everybody is very safe on paper. So they're all happy to go along with it. But in the process, have we cut the ground from below our feet? That's what is important. And I think this is where we are making a mistake, that in the process of punishing the promoters, and remember, promoters are only shareholders along, and these are all publicly listed companies. So there are a large number of non-promoter shareholders also. So in the process of punishing promoters, who I repeat deserve to get punished, we are also punishing the larger society. So could we find a middle ground? I think there was a middle ground, and maybe we have lost it.
So after we've lost the middle ground, if I were to go with your point, Behram Vakil, do you believe promoters who have for very, very long treated debt like equity, and that's something that Raghuram Rajan always said, do you believe that has been reset? Do you believe that you're finally seeing a change in attitude as far as Indian industry is concerned towards the money that they borrow and their whole attitude towards it? Are we seeing that change finally?
So I do believe that. That would be one of the most important positive results. Has it already led to it? I think it is going in that course. So I think it certainly will lead to.
Swami, I'm going to come to you, and I promised our viewers that we're going to talk about this, the implication of all of this on lending, on credit offtake. The SBI chairman, Mr. Rajneesh Kumar, was with us earlier in the morning today, and he said that they're going to lend very conservatively. They're going to be extremely cautious on who they give their money to, and they will be they'll be very watchful of who borrows from them. He also expects just a 1% growth in credit offtake. What will this entire cleanup, what will all of these norms really mean eventually to lending, eventually to credit offtake?
It's an interesting question. As till the other day, I would have said there is no problem in terms of unmet demand. There just wasn't very much demand for lending. The corporates themselves, because of lack of demand, they said, you know, we have enough capacity. Why should we be investing in a big way? And that's one reason the investment rate has been going down year after year after year. Secondly, you had the rise of the corporate bond market, a very positive thing. You've also had a situation where it became possible to borrow quite substantial amounts in foreign markets. So there have been other places from where very big loans have been taken. And because of that, I would say the stress in the banks was not coming in the way of lending. Now there appears to be a pickup. And if you see the rise in the bond prices, that could be a reflection of the fact that between the government's demand and the private sector demand, the competition has become such that the bond rates are going up. And this is a sign that finally the headroom that banks had to lend is going, and we are now getting into a stage where there will be insufficient headroom. And at this point, we can finally say, is there going to be a problem? Let me say that I think this is part of the entire process. Having been far too liberal in lending, you will tend to swing to the other side for some time. But more than that, I mean, what we are now seeing is more and more dirt coming out on the bank books. I mean, the assumption was that you put in 80,000 crores of equity, you recapitalize the banks. When I'm seeing some of these new figures appearing, the question is, I'm sorry, is the situation much, much worse, and do they require much greater capitalization? That to me is a very grave reality. There was this theory that, you know, there'll be an economic revival, and with the economic revival, all the NPAs will go away. Far from that, NPAs certainly on the books seem to be rising. It may well be that some stressed assets are getting less stressed, but even so, new guys are getting stressed. There appears to be a hugely stressed economy which is being hidden, or perhaps the stress is rising in newer sectors and we haven't paid enough attention to that. In those circumstances, you need to take care of stress in the economy before you go on a lending spree. A country that is littered with semi-bankrupt countries is not the country which should be having galloping bank credit.
No, fair point indeed. But very quickly, Behram Vakil, you know, in 17 years, SBI reports a first quarterly loss. The CMD tells us he's going to be extremely cautious. 1% growth. Swami's rightly pointed out, till now the crunch was not being felt because there were other avenues of borrowing. But now with credit offtake picking up, that crunch will be felt. But what do you do in a situation like this? Do you believe overall this is going to hurt lending, this is going to curtail lending, this is going to hit credit offtake?
No, so I think, you know, first of all, there is no magic wand. The law took 13 months start to finish, which is not only super fast by Indian standards, but must be a world record, because say Singapore took 3 years. So how often can we say that we moved much faster than Singapore? So as I said, it's 15 months. Will it take 2 or 3 years for you to see the real solid effects on the ground? No question about it. It's just been a wonderful start. Now to your question on, you know, behavioral change also, will borrowers be more cautious knowing that now that delaying tactic will not work? Certainly they'll be more cautious. And similarly, the banks too, knowing that the process is going to be very swift and seeing what has happened, will also be more careful and doubly sure. So I think that's all in all a good thing. In the medium and long term, it's definitely a very good thing. It's what the country needs.
I've got 3 last minutes left on the show, so I'll request each one of you to be very brief. But Jaggi, to you then, and if you look at the larger reform picture, the point that you were making, take public sector out of the public sector banks, privatize them. What is holding the government back to reducing its stake to 33%? This was recommended and referred by its former finance minister, who's not on such great terms anymore, Yashwant Sinha, many years back. Yeah,
I know, but before you do that, you have to change 5 or 6 laws under which banks were nationalized. So just the Supreme Court has held that some of the privatizations done during the Vajpayee era were absolutely illegal, because things that were covered by an act of parliament were through executive action privatized, like you know, Balco and other things. So the government cannot take a chance anymore. All the banks that need to be privatized except IDBI Bank, which was set up under the Companies Act, you need to change the act, and that will not pass in this political situation where the Rajya Sabha is going to bottle it up. But Rajya Sabha is not going to allow it, which is why the government has not been able to move. If they have a majority there, or if they, and especially in a situation where even the BJP's allies are today wary of going along with the main party. So I think you cannot get anything passed through Rajya Sabha today in the current political situation. So I think we'll have to wait for the new government to form before we see action on that.
Very quickly then, to you, Mr. Kannan, the government has taken a series of steps to overhaul governance in PSU banks. Are those enough?
To start with, I would say that I think banks, as Maithili was mentioning, they're not, the government is not at the back of the bankers, and the bankers are free to do what they want. Of course, simultaneously, we also see not too many projects coming up, so no major credit decisions have come up in the last 3-4 years. And the credit growth will certainly happen, but it will be much more cautious. People, both the bankers and the borrowers, both will probably look at projects with closer scrutiny and may not be as optimistic as they were in the past, and maybe take a very cautious decision. And I think overall the governance has improved. And what all we are saying right now is not the doing of the current last 2-3 years of MDs and CMDs, but something which has been there over a period of 7 to 8 years, and thus all things have come to roost simultaneously. What's actually happened is everything has boiled down and come in one particular period, therefore it looks pretty heavy. I think over a period of time all the banks have had stress assets, have had bad assets, have had NPAs, but everything seems to have bunched together, and therefore the system appears to be not capable of handling it. And one more thing is, because of this scenario, the entire provisions have also come in a bunched manner, and therefore the banks are finding it difficult to manage it. Please note that all the banks are having revenues, having expenses, and making generally operating profits. But the fact that they have to make bunched and a large amount of provisions in this for these accounts have actually led them to any some problems.
Right.
But over a period of couple of years, I think they will come over this, and if they are cautious on the sanction, it will be okay.
Okay, I'm really over on time. Maithili, very, very quickly then, what's missing as far as the governance rules are concerned, as far as the big cleanup by the government is concerned?
Oh, well, intent on the part of the government, because even though, as Jaggi says, it might be difficult to pass a law, it is very easy for you to actually act through on the Bank Boards Bureau. We set up the Bank Boards Bureau and we've done nothing. The Bank Boards Bureau has also done nothing at all. So an arm's length relationship, if the government wants, can be established. It has no intent, and that really is the base of the problem.
All right, so the arm's length distance relationship, I'm really sorry, can't give each one of you a closing word there, but completely out of time here. Can't thank my wonderful panel here, Behram Vakil, Maithili Basurma, Swaminathan Iyer, of course, R. Jagannathan and Mr. Vijay Kannan for being with us right here on ET now to discuss and talk about the state of India's banking system. The IBC norms have been set in. The fruits will only be seen when resolution happens. Has it been too blanket? Has it been too harsh? And will economic revival at all take care of all of this is really the big question. Thank you for being with us right here on the India Development Debate. Keep it with ET now. This is Top 10 at 10 coming up right next with Tanya Bharadwaj.